In this video, you'll be learning about this topic.
How do you think about when a person comes to you and says, how much exposure of this should I have? I'm sure you're looking at their age and their risk tolerance and those kind of things, but how would you respond, and how would you categorize the type of people that you would respond to?
So you might be surprised about the demographics or the age or, how close are you to retirement? And here's why. Take the extremes. So when we talk about quote unquote risk in the portfolio, when we talk about your normal basket of assets, generally speaking, you've got your stocks, your equities on one end, and then you've got your low risk bonds, your fixed income on the other end. And there's various other asset classes mixed in, but that's kind of those are the main buckets, as you know. So what does a sizable or significant Bitcoin position mean to a risky client? Well, it means they want to swing for the fences. They want to make that 300% return in a year or more, potentially. So they want an allocation. But now you talk about the low risk portfolio, which is very skewed to bonds. And what is the kryptonite for a bond portfolio? Well, that's inflation and higher interest rates. It's inflation that causes the central bank to raise interest rates potentially. And so if you have a bond portfolio and we finally get significant inflation, then your purchasing power, gets torpedoed. And you better hold some hard money assets. I use the term hard money assets for a portfolio. And historically, that's been gold and monetary metals. But as we know, Bitcoin has characteristics that are more favorable even than gold. And so, you better hold Bitcoin basically at either end of the risk spectrum there. And so I can make a pretty strong case that everyone ought to have an allocation. And it tends to be, beyond, say, a couple percentage points in the portfolio, which is effectively a hedge. Then it's more, I'd say, the folks that have a little bit higher risk tolerance and really understand it and really don't care that much about the volatility, which is a smaller subset. It's those guys that go with a larger allocation, where a larger allocation to Bitcoin tends to make sense, in my experience.
So what's the number?
Let's put it this way: I have a very few clients who are double-digit percentage exposure, but for the vast majority, we're talking 2 to 3% basically.
Yeah, but I mean, based on the numbers we were talking earlier, that's going to have a profound impact on your portfolio, even if you have a small percentage of your portfolio in it.
It really will have a profound impact if Bitcoin starts to demonetize other risk assets. If we get to that point, right, where people stop viewing Apple as a store of value and buying it for 40 times earnings, and start to think that, actually, maybe I should park it in this other internet native store of value asset. And that is the scenario where actually Bitcoin potentially takes a bite out of the NASDAQ. You were talking about the triple Q a minute ago. Takes a market share bite out of the NASDAQ, accrues to Bitcoin. Will that happen soon? I don't know, but it could happen in a period of years. We'll see.
Thanks for watching. Make sure to subscribe and hit that notification bell so you don't miss out on the next podcast episode and new investing resources.
What are your takeaways and thoughts on this discussion? Let us know in the comments section below.